the Zeta protocol. Tristan, how's it going?
Great, thanks, and appreciate you having me on.
Absolutely. We're super excited to have you on. Real quick before we jump into the interview, I'm just going to give a quick, brief background. Zeta protocol is a DeFi options protocol built on Solana. It's an order book style DeFi option protocol. Great. So, Tristan, how did you find your way into crypto?
Yeah, great question. So I guess it's been a bit of a long journey now. I definitely feel like a bit more of a veteran in the space, even though it was only 2017. But funnily enough, that's 5 years ago now, which feels kind of crazy. Um, but I think as everyone did, it was a bunch of friends who were loosely in crypto, talking about crypto and seeing it come up during the last hype cycle. It kind of gets you a bit curious, a bit involved. And I met one of my now best friends through, I think it was like a Facebook like crypto investing group, as it all starts. And then we started talking about stuff. He came from more of a finance background. I was obviously from more of a software tech background. And so he brought a lot of his ideas of fundamental and technical analysis, and I would kind of help him build some of the Python trading bots, integrate with Binance, and do stuff like that, pull down data. And so it was kind of like a nice synergistic duo. And so yeah, we traded that kind of stuff on all the shitcoin exchanges like Bittrex and all the Binance and the fun ones back in the day. And then over time, yeah, I guess the whole market nuked, and obviously we made a bit of money on the way up, and then on the way down, everything crashed, and that's when it kind of like fizzled out a little bit for me. I was like, this is pretty interesting, but I didn't get super deep into it. It was more of a kind of understanding all these different coins, what was going on. And that was like already a whole new paradigm for me, even understanding what the hell a blockchain was,
That's
and that kind of spurred. Yeah,
oh, I'm sorry.
go for it.
That
Yeah, I
that's
was gonna
fa-
say.
Go ahead. All you.
I was going to say, yeah, that kind of spurred me to actually take on a bunch of courses towards the end of my degree in like distributed systems, blockchain, consensus algorithms, and some of like my assignments towards the end of it were like learn how to build your own proof of work blockchain, learn how Bitcoin consensus works, learn how Ethereum kind of works under the hood. And I think having that kind of knowledge and understanding, oh, maybe it's not as scary as I initially thought it was, really helped. And then getting back into it properly in this 2021 cycle, I had a bit more competency to actually get in, not from like a speculation perspective, but like, hey, let's actually build like a blockchain dApp. Let's actually learn Solidity that I've been hearing so much about. And that's kind of what kicked it off for me.
Yeah, that's amazing. And so, kind of just jumping back real quick, so you actually had the tech background, the skills and the capabilities to actually program some trading strategies, whereas most of the people that are on the other side of it have the finance background, the know-how, and maybe not the technical capabilities of programming these trading systems. So in 2017, I imagine that you could see the value from a tech perspective, but what kind of made you want to invest as opposed to just buy and hold, or what made you want to trade it as opposed to just buy and hold strategies?
Yeah, that's a good question. I think I saw, well, this is actually when I was getting into a lot of this trading stuff. And as I was finishing my degree and I guess interviewing with a bunch of HFT firms like Optiva and the like. And so that actually, I think, gave me a huge leg up in terms of understanding like what the hell you do on the job as like a trader. Gave me some of that experience. I'd actually tried to write my own trading bots, which is kind of actually what I kind of demoed in a bunch of interviews, and I think like gave me a big leg up and actually got me a few job offers. Um, that was pretty cool. And I guess back to your question, sure you can like buy and hold, but I don't know. I just got really into the whole day trading thing, which was probably a bit risky of me. But I've always enjoyed maths and programming and all these kind of hard quantitative problems. So I saw it as just kind of like a applied math problem that you're like, it's almost like a game, right? That's why Sig plays so much poker. Is just like it's always like this PvP game. You're trying to get edge on the other guy. It's a bit zero sum. I don't know. It was just kind of very exciting, and I'd stay up very long nights and have all these kind of like indicators and things going. And not to say that I was like extremely profitable at all, but it was a really good learning experience. And I definitely learned a lot about trading in terms of like taking your emotion out of the game, because I think when you had like your kind of small amount of money that you have in uni and you're kind of punting that around and suddenly your P&L is changing by a huge amount and you're like, will I be able to buy lunch tomorrow? That kind of like degenerate part of me, I think I started like learning to come to terms with it, which has definitely helped with like this cycle and not being like completely degenerate and like, gambling all my money in crypto and just being smart about investments and thinking about like what are the real opportunities and what am I just buying into FOMO. Yeah.
Yeah, that's awesome. And I think I have sort of the same trading bug. These crypto and securities are not the thing. They're the type of thing that I trade, and real estate's more the type of thing that I hold. I can't do both. It's either one or the other. And so, that trading you were doing, there was option markets. Deribit was trading at the time. Did you guys focus on any of those strategies, or was it only spot trading? DEX trading, stuff like that.
Yeah, good question. So this was in the very early days of DeFi. I remember seeing Kyber Network and some of these other platforms pop up, and I looked at the tokens, but I wouldn't say that I actually like really looked into DeFi or what was possible in terms of smart contracts. That was such a new word at the time as well. Funnily enough, one of our co-founders actually was like the second market maker on Kyber, and I didn't like fully know him at the time. I think we were like loosely in contact or had been introduced, but he was actually doing like active market making stuff on Kyber. So he's got some pretty cool stories because that was like pre-Uniswap days of DeFi. And it was funny because I think they had to actually pay the exchange to, market make on that. Whereas now you see the paradigms obviously like completely shifted where market makers are getting paid out big by these protocols to provide liquidity. So it's like completely different era. But back to your original question, like, no, did not even know of Deribit or touch Deribit at all at that time. Like I didn't have huge exposure to options, and definitely my trading strategies were like very spot focused or like even early kind of margin trading or like perp stuff. But yeah, it was very unsophisticated, just kind of starting off with the really pump and dump crap of just like you see a Telegram group, everyone's just kind of like shilling this thing, and then you're like, hey, I should buy this, it moons, and then obviously all the insiders kind of like exit out of that dump on retail. And then I realized after a while that's probably not a feasible strategy to chase the pump and dumps, try and catch falling knives, stuff like that, and try and go for like more long-term strategies.
And then you were mentioning that on the bull run your strategies were doing better. Did you figure out strategies also to trade the bear market, or was it mostly kind of correlated with the direction of the market?
So it was interesting, I guess. Can't answer that fully because the angle that I was trying to take. So initially we were trying to do, I guess, like pure arbitrage, I guess. And then I kind of shifted my focus because I'd been taking a lot of courses or getting really into modeling, machine learning, all that kind of stuff, which is actually what I spent pretty much past 3 to 4 years doing before I founded Zeta. And so that was something I was like learning at the time. And then there were like a bunch of research papers on there, like how to use reinforcement learning for trading. And it is a bit like speculative, I guess. Like it's such a new field, and a lot of the papers are flawed in that they kind of like leak future information into like your time series model or do this and that and like violate some assumptions. But it was pretty interesting, and I read through it and I like coded up some stuff myself, or some of them had open source code and I'd run it. Some of them had just like insane benchmarks or like insane back tests in their papers that were like regenerated 1000x or something like that, and they'd like do it over like years of historical crypto data. And so I was like somewhat skeptical, and I've heard from like a lot of people that, this tends to always be something wrong with their experiments or the way that they back test it, because who would put like a, crazy profitable strategy out in like a research paper and kind of give it to the world. So I kind of realized like if you're profitable in trading, like it kind of makes sense to keep it closed sourced and not actually share it with the world. So that's where probably like most of the alpha is. But I was playing around with that, and it was kind of like a cool experiment. Yeah, it didn't make like that much money, and there were like definitely like a lot of performance things. It was like very complicated. I don't know if you're familiar with reinforcement learning, but it's essentially like a dynamic kind of algorithm. It's kind of modeled on how the brain works, I guess. It's like you do an action, either it gives like a positive or negative reward. In this case, like your P&L on a trade. You'd be like, did you make money? Did you lose money? That goes back into the model as just kind of like we tweak the parameters, so it kind of learns on the fly what it should be trading. But then, yeah, you run into all these things of like, how do you model like long-term signals and time series, and how do you do this and that? And I don't know, it's just like a very complicated problem compared to something very simplistic, which would just be like arbitrage between like a Binance and an FTX, which would have been probably like much easier route.
That's very interesting. Oh, that's cool. And then you mentioned you went into distributed system. You started learning about that. You also started learning Solidity.
Yep.
Solidity, for those who don't know, that's the smart contract language on Ethereum. And so you guys are built on Solana. Was there a question between going with Ethereum or Solana in your early days?
Oh, absolutely. So I guess it all started, we had these like brainstorming sessions, maybe it was a little over a year ago now, which feels kind of crazy to say. But we were just sitting up in a WeWork, just throwing ideas at each other and, just chatting, I guess, amongst ourselves on what we should build in the DeFi ecosystem. And I think, yeah, one of my co-founders goes by the pseudonym Epsilon. He's basically like comes from trading background. He was a professional options trader. And so, yeah, he said, hey, let's build an options platform. It's like, seems pretty underserved. He'd obviously been trading a bunch and it's a huge market in TradFi. And yeah, we kind of looked what was out there and it was not that compelling. There was just like, it was like Open, there was like Hedgic, there were some other ones. And I think they were just like very poorly priced. They had extremely high gas fees, like in the order of like hundreds of dollars to put on like a spread or something or other, which is just like, yeah, you just price out every retail person out there. And it was just like not super compelling. And then we started building an MVP ourselves. So me and my other co-founder who'd done some Solidity development before, I just kind of learnt it a few weeks prior to that, just picked it up. It's pretty similar to JavaScript, Python type stuff. So it was pretty straightforward. And then we started building out an MVP, somewhat based off of Open, I guess, in terms of like you mint a call or a put option and you can do fancy stuff with that. But then, yeah, we looked like, how does this scale? How does this kind of rival, I guess, a centralized exchange, like a Derivs or like a CME or something or other? Like, what do we miss? And we realized like, hey, this one-sided AMM model is probably not it. That just kind of sells vol all the time and gets kind of picked off on every trade. And that was around the time that we were just looking at alternative chains. We were looking at like L2s, and I think we talked to the Arbitrum team, but they weren't really live yet, and they were kind of a bit fuzzy on timelines. But they did seem really smart, and so we were like, okay, that's one option. I think we looked at like Polkadot, a few of the other chains that were coming out there. I think that was around the time like Polygon was starting to kick off a little bit as well. And then I think I just saw Solana, and I just saw that 50,000 TPS headline number, and I was like, oh, that's pretty nice. Like that's starting to get to like Visa level scalability, which is pretty cool. And then I think one of the big draw cards was also that Serum existed. And for those who don't know, Serum is the like fully on-chain order book built on Solana. That was kind of pioneered by a bunch of the FTX crowd. And so we started playing around with that. They have a bunch of great demos of like trying to break Solana. And this is in the early days when like Serum was like the only thing there. There was maybe like Bonfida as well. Like Radium hadn't even come around. This is like super early days of Solana. There were almost like no docs, and the docs, admittedly, sorry Solana team, but they were terrible. And so it was really hard to get started. There was only one tutorial pretty much out there in existence written by this guy, Paul X. And we just studied the hell out of that, and we started playing around with it and learning it. And like, trust me, it was like freaking hard. Like learning Rust and then learning all the Solana fundamentals, and it's like very low level. You have to like unpack bytes and do all this stuff. Thankfully, like I'd done my degree in robotics essentially, so I'd worked with all this like embedded systems, hardware stuff, and like very low level instructions and like assembly. So I was like somewhat comfortable with it, but it was still a massive learning curve for me. And then yeah, we kind of just went through there. Like I was lucky enough to get on the phone with Anatoly in the early days because they were just, I think, really trying to hunt out dev teams and people who wanted to build. So we like chatted a bit with him on the phone, and I was super impressed of like how he was thinking about things. I read the white paper a couple of times. I'm like, oh, it's pretty nuts how their algorithm works and how it can like order stuff in time using like cryptographic timestamps. Thought that was pretty innovative. And then the thing I think that really sold me was I basically spent the past 4 years of my life doing a lot of this like distributed data analysis stuff, data science, machine learning. And the only thing that really enables that is like highly parallelized computing. So if you're trying to crunch like terabytes of data and you're expecting to do that on like one core of your machine, like not going to work. You run it on like a cluster of like 1,000 machines, it does it in parallel, and you can do it in like very short amount of time. And that's how it scales really well. And the funny thing about Ethereum and like EVM chains, everything is on like one thread. It's like you do it serially, one transaction after the other, and it just bottlenecks the whole network. And that's why Ethereum can pretty much only do 15 transactions a second on the L1. And then the cool thing about Solana is just like, you have this concept in distributed systems of like the kind of read writes problem. So it's like when people are modifying things, they have to be in order, but when people kind of like just read only, you can do them in parallel. And so they had a smart, this like C-level runtime, which like you can tag all the different accounts of like, this is what I'm going to modify, this is not what I'm going to modify. and it can parallelize everything. And so theoretically, you can do all these transactions on a massive network in parallel, and that's why it scales to 50,000, and they're like, we'll do a couple of 100,000 when GPU infrastructure or whatever, like computing infrastructure scales with Moore's law. And I was like, okay, this is cool, and this seems like it'll scale. So I guess like the nerdy part of me with distributed systems, like, okay, I like this approach a lot more.
Yeah, that's fascinating. So real quick, just if I can just put it in layman terms. So Ethereum, single thread. So basically everything's chained. So there has to be an order to how all the transactions are done. But then you were explaining on Solana that you could tag sort of where this is going to be affected and where it's not going to be affected. And therefore you can process them in parallel because they are not reliant on the sequence of the previous transaction.
Yeah, that's exactly right. Well summarized. So imagine in Ethereum, it's like, say we have 4 parties. So it's like me sending a transaction to my friend, and then you are sending a transaction to someone on your team on Gvol, right? There's like no overlap, I guess, in state of what we're doing. I'm sending a completely separate transaction. So in Ethereum, like, you would have to order my transaction of like A to B with your one, like C to D. And that's kind of like an unnecessary slowdown. Whereas in Solana, we don't overlap account sets at all. So I would send my transaction and it would get executed at the exact same time as yours. So we basically like halve the time. And you can imagine if we scale this up to the, Solana's processing, thousands of transactions a second, this suddenly actually starts to become like a big deal, where instead of having to process 1,000 things like one after the other, you're parallelizing and doing 1,000 things at once, which just seems like a better way to go.
Yeah, that totally makes sense. And then one of the really interesting aspects that you have on the Zeta protocol is that you can basically trade options on margin. So I can be short an option, and Zeta has this internal risk system that monitors my collateral, and if I'm under collateralized, I get liquidated. So my guessing is that we need a system that can basically monitor high frequency and process liquidations quickly as possible so they don't get out of control. Now, correct me if I'm wrong, but Solana has 400 millisecond block times. Is that right?
That's correct. Yep.
So does that mean that 400 millisecond block times, 50,000 transactions per second throughput? Now, if I'm a market maker, how often can I update my quotes? Is it only every 400 milliseconds, or is it based on the throughput side?
I guess it's a bit of both, to be honest. It's like the worst of both. So technically, if there was zero congestion, and to be honest, I will say that 50,000 number is like optimal settings where like block packing is really good. In reality, it's been more around like 3,000, and it's been like a lot lower recently, which has been annoying, but they pushed out a bunch of changes. So it's like 3,000 to 5,000 now. So it's actually quite usable right now, which feels great. And our market works really good at the moment, whereas it was struggling a bit before when Solana was a bit crunched. But back to your question, yeah, it's kind of like the worst of both. So I guess you have this hard limit of 400 every 400 milliseconds. Like that's just like how each block is kind of sequenced, and you can't do faster than that. But then if the chain is really congested, then like you will have issues. Kind of don't have this on Ethereum where you have like a mempool and you can kind of like pay gas fees for your transaction. But here it's like your transaction times out after 30 seconds if it doesn't get included in a block. And so, yeah, our market makers basically will tend to like put in a pretty high frequency, like pull and replace quotes. And then, yeah, sometimes they don't get confirmed. So you have to have a bit of logic to like retry things if they kind of don't get included in the block. But if Solana's running smoothly, I think for the most part, like you tend to get all your transactions included. Yeah, so it's like a working challenge that we're kind of tackling head on with Ledger Prime and Patent. So it's an interesting problem.
Yeah, that's super interesting. So we've recently had 2 big market events. One market event was that Solana actually had some trouble in the past and the network went down. And on the other side, we've had a huge market sell-off recently in crypto. So how did either of those impact the Zeta protocol? And was there kind of big events? Were those big events for you guys?
Yeah, absolutely. They were massive events. So yeah, I remember the most recent grind to a halt that Solana had was when I was at that FTX Bahamas conference. So it was a bit of a sour note to end the conference on because there was all this exuberance and obviously very Solana focused. There was a hacker house there and lots of builders. And then I wake up that morning, Solana had been kind of slowly on the down and out, and then it just kind of ground to a halt that day, which is a bit sad. And yeah, like we had to obviously pause our exchange, or no one could actually place any kind of quotes and stuff, which was a shame, but it was a problem across the space. So not really I guess, localized to us.
Mm-hmm.
It did kind of cause some annoyance on a bunch of our like data indexing that we were doing, which is what I mainly take care of, and that's what you guys are pulling from at the end of the day with Gvol. It kind of caused some issues there in terms of things are down. I had to restart a bunch of our like infrastructure there. But other than that, like everything was I think fine once things were back and running again. I think Solana was a bit sluggish off the back of that, but like with the recent improvements in like what was it 1.10.25 or whatever, it's become a lot more usable. And then the second event, I guess, is this whole market unwinding with UST and a bunch of other things, just causing this massive domino effect. And the interesting observation was actually our platform has done record volume. It did like maybe 80K open interest on just our Solana options, I think, when UST depegged. So people were very actively hedging and doing cool stuff there. So we saw record volumes there. And now I think with more blowouts with like 3AC, we actually cracked, I think, 90. And if I check this morning on the stats, we might be even at like 100K open interest as of today. So our platform's been doing better than ever. And I think people use it even more in these volatile market conditions, which is naturally, I think, what options cater to. So it's been good for us from kind of a volume and user adoption standpoint. And I think if you look at other similar protocols, there are a bunch on ETH that I think blew up a bit. There are a bunch on Solana, interestingly enough, derivatives protocols as well, that kind of blew up and had tens of millions in debt because I think their margin systems were like tuned to be quite risky and not really dealing for these black swan events of when an asset goes down 99%. But thankfully for us, like we've had, I think, pretty conservative margin parameters. We've also like slowly increased deposit limits. I think we have pretty sensible traders on the platform who don't go like ridiculously leveraged. And even when we do, options, unlimited risk on the kind of selling call side of things. So, we actually penalize people quite a lot and make it like pretty hard to, I think, aggressively short a bunch of these options because they can be pretty risky. And so I think because we had good risk limits in place and we have this like super fast performant liquidator, I think things are pretty good, and I don't think anyone got like necessarily unfairly liquidated or like blew up the platform or anything. Like everything kind of functioned as it should, which was a very reassuring fact.
Yeah, that's fantastic. And then one of the things, and feel free to correct me if I'm wrong, in my understanding is that you guys have an insurance fund as well. So if someone loses more than than what they own, then they'll dip into the insurance fund. And then finally, if the insurance fund is depleted, essentially the losses become socialized. So have you guys had to go into your insurance fund at all into liquidation processes?
Yeah, good question. So yeah, we do have this insurance fund, and no, we haven't had to touch it at all. Like so far, everything's been like super smooth sailing for us. So
Wow.
I think that's really positive.
Yeah, that's super positive. And as of right now, of this recording, we have two weekly options, and they're both on Solana. Now, do you guys plan to extend maybe more maturities or more tokens?
Great question. So yeah, this is actually, I guess, a bit of an alpha leak and something that's coming out. So yeah, we did extend. We used to only have one expiry. We now have two. We're definitely looking towards adding more longer dated stuff. So maybe like a quarterly over time, although there's not an ETA for that. But the thing immediately that we're working on is multi-asset, multi-underlying. That's something that we've been doing a bunch of work on the past couple of weeks. So backend is pretty much all done for that. It's just a bit of front end work and like SDK work to make it compatible, and it required a little bit of refactoring. But yeah, we're looking to go out there and it's now generalized to basically we can list any underlying, not just Solana, which is great, and it will all be kind of considered under the one hood. And so the markets that should be coming are Bitcoin and Ethereum. I think they're pretty standard ones to have in options markets. That's obviously what a bunch of the other bigger options players do. And so I think it will be nice to have like feature parity there. And then from that, we pretty much have free reign to, I think, list any market that people see as being very interesting and that we want options on. So I think that's the nice thing about DeFi is, with running like one or two kind of scripts to kind of, get the market pricing turning over, we can basically list the options market on anything that has an oracle.
Yeah, that's fascinating. Very exciting stuff. Okay, so I just want to jump into a couple more questions, and then I'd love to learn about Flex Options, which is another product that the Zeta protocol offers. So when basically kind of just summarizing for listeners, so Zeta has an order book style similar to what we would see on Deribit, an internal risk engine that monitors for leverage positions if they're under collateralized, so on and so forth, a
Yep.
liquidation system, and an insurance fund in case liquidations exceed depositors' funds.
Hmm.
Now, typically, the internal risk engine has its own theoretical values. So let's say that the market, for listeners who are new to options, sometimes the option market becomes really wide and there's no bid or ask. So you can't really take the midpoint as a fair value. How does
Hmm.
the Zeta risk engine determine theoretical values?
Yeah, great question. Glad you asked that. So, yeah, we use kind of Black-Scholes model under the hood for a bunch of this pricing. We actually use the Black 76 model, which is a modification on that, which allows you to price based off the future. So I guess for those who don't know, we also have futures on our platform, which is pretty cool. And it was kind of for that reason. So we have a future and we have like kind of a interest rate surface that we can kind of put into our model. And so, yeah, what does Black-Scholes take? It's obviously a spot price, which we get from the Oracle. It's a strike price, which is fixed. It's the expiry, which is fixed. And then you have the interest rate and the volatility, which I guess are the parameters that you somewhat take an opinion on. And so what we do is we actually maintain an internal volatility and interest rate surface on the platform. So you can think of it as like a 5-point surface with the x-axis essentially being like your delta points, and then we basically like permute that, I guess. So basically how or when people trade against it and we think that we're quite off in terms of this trade actually occurred very far from what we thought the implied volatility was at this certain point, we kind of just like slowly update the surface and kind of what you can think of as like a Bayesian update in that direction. And so it's like a self-correcting surface that kind of fits to market. And then we have like a way to fit that curve, obviously, which is pretty simple. So there's a lot more innovation to be done there. And honestly, that's like a big rabbit hole where we could probably spend 6 months just really improving that side of things. But that's like a very basic level of how that works. And it actually gives pretty good mark prices that tend to be kind of between the bid and the ask of what our market makers quote. And that's pretty cool. And then there was the very big technical challenge of like, how do you actually implement Black-Scholes on chain? If you try and do that in Ethereum, I think you just like pay an insane amount of gas. The nice thing with Solana is it has a bit more flexibility in terms of the compute and it's a bit more performant. But then you run into all these issues like, it doesn't support floating point numbers. You have to do it all in this kind of like fixed point integer stuff. It's also like very expensive to do stuff like logarithm operations that, aren't really supported by Solana libraries. And you have to I had to hand roll pretty much my own implementation that was super efficient. And so, yeah, I spent like November last year, maybe like 2-3 weeks just figuring out how do I write like full Black-Scholes on chain. Managed to like crack a solution. And so we can price basically a strip of options, like, what is it, 23 options, well, like, yeah, like 22 options. So 11 calls and puts plus a future, all in one instruction on the Solana blockchain, which is pretty cool. And
Very
so, yeah,
cool.
we can just do that for every expiry. So, yeah, it's like super efficient, and we can update this stuff basically every block very quickly.
Wow, that's awesome. And I've never even
Yeah.
thought about the idea of sort of the computational load and the lack of functions that are already existing in a library that you could just call. Um,
Yeah.
so lastly, you have this product called Flex Options, and maybe you could give us a quick overview of the idea behind Flex Option, and is it something that's already being used?
Yeah, absolutely. So I guess this is an idea we came up with end of last year. And I think it was probably like after Breakpoint and stuff. So we knew there was like definitely demand for the order book stuff, but there's also a massive market that's uncatered to in terms of like OTC options and I guess a lot of these structured products. And so there was definitely like a need for customizable options because a lot of people come to us and they're like, I want to buy or sell this option with this specific strike or this specific tenor. And we would be like, hey, like tough luck, buddy. Like we're not going to list like a new market just for you. It doesn't really make sense. And we have this standardized order book, right? Like with Derivs, where we have standardized expiries and we kind of pick our strikes ahead of time and just stick with that. And that helps obviously with the liquidity. But then a lot of these like treasuries or like vault products and stuff like that really wanted full customization. And so we were like, hey, it makes sense to have, I guess, like a complementary product in terms of what we call flex options. I think that's kind of the terminology in the US as well as like, all these like flexible parameters. And so I think that was like a really nice DeFi native way to have this like permissionless option minting infrastructure. And yeah, this protocol is way simpler than like what we did for the order book stuff, because the order book, risk engine, you got to worry about like, order book matching engine, liquidation, stuff like that. This Flex stuff, it's like OTC options. You can basically like put in any number for like all the parameters. You can like choose, customize your option how you want. It is fully collateralized though, so it is a little bit less margin efficient, but it is permissionless in that sense because we don't have to worry about liquidations. Like you create that option, there's no way it can get essentially like liquidated. It's basically tokenized. You can send it off to anyone. You can do anything you want with it. You could build, I don't know, some kind of protocol on top of those tokens that uses it. There's like a huge amount of composability that comes from that we can't natively, I think, get from the kind of initial DEX product that we made. And so it was pretty cool. We whipped it up in, I think, pretty short amount of time. And this basically came from, I think, just like an impromptu lunch that we had with the Ruben team in Singapore. We were just chatting to them and they're like, hey, we want to move and migrate some of our stuff to Solana or kind of expand to that chain. They didn't have Rust engineers and I don't think they had the time on their hands. And we were like, hey, let's be a launch partner. Let's build the smart contracts. And that's kind of what we did. We built out this permissionless option token, minting, settlement, auction layer. And we launched with them as our launch partner. And since then have got bunch of other guys on board. So like Katana is another big structured product protocol on Solana. We've also had this big boom of like exotic structured products which are coming out. So exotic markets and a bunch of other ones that are very new and kind of early to the market are coming out and building out these kind of exciting, I guess, wealth management products that tend to be very popular in the TradFi kind of banking space. It's probably like a huge market there, and everyone uses our infrastructure, which is really cool to see. And so I guess to run through how it basically works is the Vault protocol will go there, they'll talk to our infrastructure and they're like, hey, we have this Vault and we want to buy, I don't know, a bunch of like out of the money Solana kind of call options or put options. And they tend to do these put selling vaults or these covered call vaults. So kind of the bread and butter of what a lot of these guys do. Then they take these options throughout the course of the week. They run an auction with market makers. They kind of sell it off to them. We actually have like a UI as well for a lot of these auctions. Whereas before, as I'm probably sure you know, it's like a lot of these Telegram auctions that I think are quite tedious and not very, I guess, DeFi or decentralized. And so we've got an auction interface, which is nice for that, and trying to iterate on more kind of interesting auctions, like what works. Is it going to be like blind auctions or, there's all these different auction styles as well. And then once the market makers essentially buy up that vol and it's sold by the vault, that kind of premium, I guess, goes back to users in the case that it's like obviously not exercised. And then that's basically how a lot of these structured products work. It's just kind of this like permissionless layer that we built for them that kind of scales to anything. So it's a pretty cool product, I think.
Yeah, that's very cool. That seems very scalable in a lot of different directions of things we probably wouldn't even think that would have options, but I'm sure we'll have options soon enough. So that's super cool.
That's right. Yeah, you got cool stuff. Like even people want to do like employee stock option vesting through it, or like, you're also going to get like DAO treasury management, because I think that's a big thing, right? DAOs are sitting on like literally like millions of dollars of treasury money, and they're really not monetizing it or kind of earning anything from it. So whoever manages to crack that and get people to actually be productive with a bunch of their static capital, like that could be pretty huge. But yeah. So many options out there, no pun intended.
I love it. Cool. Well, just to wrap up here, I'd love to just kind of finish off with a couple personal questions, and then we'll take it from there. So from a personal perspective, so your background is not in options, and now you do run an options protocol.
Yep.
Do you have any good books that you recommend people who are new to options to read that you found useful?
Oh, that's a really good question. To be honest, like a lot of it I just learned from just spending a lot of time with my co-founders who are like traders, and they're just like, we'd run whiteboarding sessions, I guess, in the early days, but he'd pretty much run me through like what they taught at SIG, and we ran a bit of like an internal course. So that was pretty good, just like learning how all the pricing works and like looking at the option board and like a bunch of different arbs that you can do and like put call parity and all this kind of stuff. Something that I found was pretty good. There was like I think Acuna Capital has a bit of a options market making course, which is quite technical, I guess, but it was pretty good. Derivs also has a pretty good course on their website that we basically mandated that like all of our new joiners, all of our new employees do that. It doesn't take too long. You can probably knock it off in like a day or two, but it really goes through all the fundamentals of what you want to learn. And then, yeah, I guess I managed to find some textbooks that were all on like Black-Scholes pricing and stuff like that when I was trying to implement it and get more dig into the weeds of like how that stuff worked. Don't remember the names off the top of my head, but yeah, they were interesting, and it depends how deep, I guess, you want to go with options. If you're just like a casual punter or you want to understand like all the math that goes on between it, I think there's like you can get really deep into this topic. It's kind of nuts.
Yeah, it's like never ending.
Yeah.
Um, Great. And then lastly, for fun, do you find any time to do anything outside of work and running a company and coding a lot?
Yeah, great question. I mean, when I moved here, I think cycling is a big thing in Singapore. So I got a road bike. I've been doing that a lot. Unfortunately, did get in like a bit of an accident not too long ago. So it's kind of made me a bit more hesitant, but try and find a work-life balance, even though crypto and options is really like a 24/7 market, and really like preoccupies you. I think it's good to have some balance in your life. So I try and keep healthy, keep active, trying to, improve my sleep as well, which I think has generally been pretty terrible. But yeah, coding late at night is definitely never a good idea. I think it's like trying to be more of a morning person just makes you so much more productive and like better as a person.
I love it. I love it. Well, thank you so much, Tristan, and everyone who tuned in. Thanks again for coming and watching. And remember, find edge, capture alpha, and slang size.